Hi everyone, welcome to my YouTube channel Learn Commerce with Namita. I am Namita Mane. In today's video, let us solve an example of ratio analysis. This example was asked in last year university examination, that is April 2019. So the example is, following are the summarized profit and loss account and balance sheet of Amaze Limited for the year ended 31st December 2017. So this is the profit and loss account for the year ended 31st December 2017. So this profit and loss account includes trading account also. Okay, so in debit side, to opening stock, purchases carried inward, gross profit carried down. Then in credit side, buy sell. Now in buy sell there is credit sale and cash sale. So total amount is 19 lakh rupees. By sales amount is 19 lakh rupees, which includes credit sale as well as cash sale. Then next is by closing stock. Then to the next side, to the debit side is operating expenses. So this part are all of profit and loss account. So above part was trading account. So to operating expenses, non-operating expenses, to net profit carried down, gross profit brought down, carried down, the non-operating income. So these are the items or particulars which are given in profit and loss account. Next is balance sheet. Balance sheet is given liabilities and assets. So in liabilities, equity share is given, share capital is given 4 lakh rupees, reserve, profit and loss, other current liabilities, bills payable. Then in assets, land and building, plant and machinery, stock in trade, debtors, cash at bank and bills receivables are given. Now next what we have to calculate, you are required to calculate the following ratio. First ratio is gross profit ratio, second is net profit ratio, third is operating ratio, fourth is stock turnover ratio, fifth is debtors turnover ratio, sixth is current ratio and seventh is liquid ratio. So by observing this profit and loss account and balance sheet, we have to calculate this following ratio. So total 7 ratio we have to calculate by observing this profit and loss account and balance sheet. So remember one thing, this example was asked for 20 marks in April 2017. So we are solving the previous year question of ratio analysis. Even in this 2019 pattern, so in TYBCOM Advanced Accounting, unit number 4 is ratio analysis. So even this time in 2019 pattern, the ratio analysis question will come for 20 marks. So let's solve this example. So remember one thing, we have to solve total 7 ratio. For this you need to know the formulas of this ratio. In my last lecture I have solved one example related to this chapter. So you can refer to the last lecture. So now first we have to calculate gross profit ratio. First is gross profit ratio. So solution. First ratio we have to do, we have to find gross profit. So calculation of gross profit ratio. Now what is the formula of gross profit ratio? To find gross profit ratio, formula is gross profit upon sales multiply by 100. Now in question, gross profit is given. Gross profit is 8,80,000 and sales is given 19 lakh rupees. So gross profit is 8,80,000 upon 19 lakhs multiply by 100. See here, gross profit, okay, to gross profit carried down is 8,80,000 and sales is 19 lakh. So we have to multiply it by 100. 8,80,000 divided by 19 lakhs multiply by 100. So we get 46.31%. So gross profit ratio is equals to 46.31%. So this is our gross profit ratio. Now second gross profit ratio we have calculated, we have got tick mark. Next we have to find net profit ratio. So second ratio is calculation of net profit ratio. Now to find net profit ratio, formula is net profit upon net sales or sales multiply by 100. Okay, so we are calculating net profit ratio. Net profit ratio is formula is net profit upon net sale multiply by 100. Now in question net profit is given. Okay, net profit is 5,20,000. Net profit is equals to 5,20,000 divided by net sales. So sales are 19,000. Okay, so this 19,000 sales includes credit and cash. Okay, so credit sale is 15 lakhs plus cash sale is 4 lakhs. So 15 plus 4, 19 lakhs. So net sales is 19 lakhs multiply by 100. So divided 5,20,000 divided by 19 lakhs multiply by 100. So answer we get 27.37, round off. So net profit ratio is equals to 27.37%. So this is our net profit ratio. Now net profit ratio we calculated, tick mark. Next we have to find operating ratio. Third ratio is operating ratio. Calculation of operating ratio. Now to calculate operating ratio, formula is cost of goods sold plus operating expenses upon sales multiply by 100. So to calculate operating ratio, formula is cost of goods sold plus operating expenses divided by sales multiplied by 100. Now see here, in this example we have to find the cost of goods sold, and in this example operating expenses value is already given. Okay, so no need to find the operating expenses, but we have to find cost of goods sold. Okay, now there are two methods to find the cost of goods sold. I will show you both the methods. First thing, we have to find cost of goods sold. Okay, see, for cost of goods sold you can find it by sales minus gross profit. Okay, so what are sales? The total sales are 19 lakh rupees. Okay, sales are 19 lakh rupees. 19 lakh rupees minus gross profit. Gross profit is 8,80,000. Okay, 8,80,000. 8,80,000. So 19 lakhs minus 8,80,000. 8,80,000. 10,20,000. We get the value that will be our cost of goods sold. Okay, 10,20,000 is cost of goods sold. This is first method to find the cost of goods sold. Second method to find cost of goods sold, or you can use this method also to find cost of goods sold, is equals to opening stock plus purchase plus direct expenses minus closing stock. Okay, so now for cost of goods sold, second method to find cost of goods sold is what? Opening stock plus purchases plus direct expenses and less closing stock. Now in this example, see, opening stock is 1,99,000. Okay, opening stock 1,99,000 plus purchases. So purchase is given 10,90,000. 10,90,000 plus direct expenses. You will get it in trading account. Okay, direct expenses over here is carriage inward. So carriage inward value is 31,000. Carriage inward 31,000. 31,000 less closing stock. Closing stock is 3 lakh rupees. Less 3 lakh rupees. Okay, so if we add all these three and less 3 lakh, so the amount will be 10,20,000. Okay, now see, this is also one method. The second method is also this. So whichever you find easy to find the value of cost of goods sold, you can use it. Okay, so now we have got the value of cost of goods sold, that is 10,20,000. Okay, so therefore operating ratio is equals to cost of goods sold. Value of cost of goods sold is 10,20,000 plus operating expenses. Now here operating expenses value is directly given. Okay, if it is not given, then we have to find the operating expenses, like what are the expenses in the profit and loss account, like this thing, selling expenses, administrative expenses, etc. So the operating expenses is 4 lakh rupees. 4 lakh rupees upon sales. Okay, so sales is 19 lakh rupees. 19 lakh multiply by 100 is equals to, so 10 lakh 20,000 plus 4 lakh divided by 19,000, 19 lakhs, sorry, 19,000 no, 19 lakhs multiply by 100. So we get 74.73%. 74.73% is operating ratio. Okay, now in this way you have to calculate the operating ratio. Next is, after operating ratio, we calculated operating ratio. Now we have to find stock turnover ratio. Fourth ratio is calculation of stock turnover ratio. Now to calculate stock turnover ratio, formula is cost of goods sold upon average stock. So already we have got the cost of goods sold in the above above this thing ratio, that is when we were calculating operating ratio, at that time only we calculated the cost of goods sold value. So cost of goods sold value is 10 lakh 20,000. Okay, 10 lakh 20,000. Now we have to find the average stock. So to find average stock, formula is opening stock plus closing stock divided by 2. So opening stock is here, to opening stock 1,99,000 1,99,000 plus closing stock value is 3 lakh rupees plus 3 lakh rupees upon 2. So we get 2,49,500. So average stock is 2,49,500. So put the value 2,49,500. So if we divide this, we get average stock turnover ratio as 4 times. Okay, some points will come, but round off it will be 4 times. So stock turnover ratio is 4 times. So turnover will be always in times. I hope you have understood how to calculate stock turnover ratio, cost of goods sold upon average stock. So to find average stock, formula is opening stock plus closing stock divided by 2. Opening stock and closing stock you will get from the question itself. Opening stock is 1,99,000, closing stock is 3 lakhs. So divide this to add opening stock plus closing stock, then divided by 2. So stock turnover ratio is 4 times. Now next we have to find debtors turnover ratio. Next is fifth ratio is calculation of debtors turnover ratio. Now debtors turnover ratio formula is, now debtor is related to credits, okay, means debtors is related to credit sale. So debtors turnover ratio is credit sale upon average debtors. Okay, now see, credit sale is equals to, see here sales are given. Now this sales, total sales are how much? 19 lakh rupees. Out of this 19 lakh rupees, 15 lakh is what? Credit sale. And in cash how much? 4 lakhs. So now debtors, if we want to find the debtors turnover ratio, we have to take the credit sale amount. So credit sale amount is 15 lakh rupees. So 15 lakhs upon average debtor. Now we don't have average debtor, so we have to find the average debtor. Now see, average debtors we can calculate by opening balance of debtor plus closing balance of debtor, then divide it by 2. Now here in this example, opening balance of debtor and closing balance of debtor is not given. So how to find the average debtor? So average debtor you can find by debtors amount 90,000 plus bills receivable 2,10,000. So this is the second method to find the average debtor. So average debtor we can find it by debtors plus bills receivable. Bills receivable. So debtors is 90,000. Okay, plus bills receivable was 2 lakh. 90,000 is debtors. Bills receivable is 2,10,000. 2,10,000. So total we get 2,10,000. Total we get 3 lakh rupees. So average debtor is how much? 3 lakh rupees. So put in the formula 3 lakhs. So the answer we get 5 times. Okay, this 0 get cancelled. 3 ones are 3 5s are. So 5 times is the debtors turnover ratio. So debtors turnover ratio is equals to 5 times. So debtors turnover ratio is 5 times. Now we calculated debtors turnover ratio. Now we have to find current ratio. Sixth ratio is current ratio. Sixth, calculation of current ratio. Now to find current ratio, formula is current asset current assets upon current liabilities. Current assets upon current liabilities. Now first we need to find the current assets. Now current assets we can get by, first we need to identify the current assets in the balance sheet. Now look at asset side. Land and building, plant and machinery are not current assets. These are fixed assets. Okay. So now what is remaining? Stock in trade, debtors, cash at bank and bills receivable are current asset. Now stock in trade amount is 3 lakh rupees, debtors 90,000, cash at bank 1 lakh 20,000, bills receivable 2 lakh 10,000. Add all these four things, okay, then it will be as a current assets. Okay, so current asset, stock plus debtors plus cash in hand or cash at bank plus bills receivable. So stock amount is 3 lakh rupees plus debtors is 90,000. 3 lakh is stock in trade, debtors is 90,000, 90,000 plus cash at bank 1 lakh 20,000 plus bills receivable 2 lakh 10,000. So add all this thing, the total will 7 lakh 20,000. Okay. Now we got the amount of current asset, that is 7 lakh 20,000. Next we have to find the current liabilities. So to find current liabilities, identify or search or observe the balance sheet of the question. Okay, so in liabilities, capital, reserve, profit and loss cannot be current liabilities. So what is remaining? Other current liabilities 1 lakh 80,000 and bills receivable 80,000. So current liabilities is equals to other current liabilities plus bills payable. So other current liabilities 1 lakh 80,000 plus bills payable is 80,000. So add this to, the amount is 2 lakh 60,000. Okay. Now current ratio is equals to current assets upon current liabilities. So current asset is 7 lakh 20,000 upon 2 lakh 60,000. So the ratio will be 2.7 as to 1. This is a current ratio. Okay, so sometimes in calculator this answer will not come in a ratio format. You need to find it separately. Now after current ratio, we need to find liquid ratio. This is the last ratio which we need to find. So 7th number, calculation of liquid ratio. So liquid formula to find liquid ratio, liquid assets upon liquid liabilities. Okay, so now for this also we need to find liquid asset and liquid liabilities. Now liquid assets, to find liquid assets is equals to current assets minus stock in trade. Okay, so here we have already got the amount of current asset, that is 7 lakh. See here, 7,20,000 minus stock. Okay, so stock is 3 lakh rupees minus 3 lakh is equals to 4,20,000. So this is a liquid asset. Now next we have to find liquid liabilities. So to find liquid liabilities, formula is current liabilities minus bank overdraft. So here in this question we need to check whether overdraft is given or no. So observe, in profit and loss account also, in balance sheet also. So bank overdraft is not given, so leave it as it is. So current liabilities total is 2,60,000 minus bank overdraft nil. So hence therefore liquid ratio is equals to liquid assets upon liquid liabilities. So liquid asset total we got 4,20,000 upon liquid liability is 2,60,000. 4,20,000. So the liquid ratio is 1.61:1. So this is a liquid ratio. Okay, so let's check whether we have calculated all the ratios. Yes. Okay, so gross profit ratio answer is 46.31%. Net profit ratio is 27.37%. Operating ratio is 74.74%. Stock turnover ratio is 4 times. Debtors turnover is 5 times. And current ratio is equals to 2.77 as to 1. And liquid ratio is 1.61 as to 1. Okay, so I hope you have understood how to calculate the given ratios which are asked in university question paper. Thank you very much. Please subscribe my YouTube channel, like and share the video, and do not forget to press the bell icon.